and we had a little miscommunication today. So I was supposed to make a proposal. I heard it like 3 hours ago. So I wanted to make a proposal about Gemalto. So those of you who are looking for a proposal, Gemalto, long, I think it's a good option, but I haven't looked into that many financials. But I want to present my first proposal. I made it BNR Beurs. It's about Petrobras. For those of you who don't know Petrobras, it's a Brazilian oil company. They're the largest company of South America. That's pretty important to know. Also the largest company in Brazil, obviously. And basically what they do is they get oil from the ground, but most of it is offshore. So offshore means that the production for them to get oil out of the ground is more expensive than getting oil out of the ground in Saudi Arabia, for example. Another important thing to know is that 50%, more than 50%, 50.3% of the company is owned by the Brazilian government. Well, that's what Petrobras does, basically. And then the thing that happened last year. It was last year, November, this time. Then the oil price was still at around $100 per oil barrel. And the thing, what happened was that Petrobras was accused by the SEC that there was fraud. And what were they accused of? That they paid 1.2 billion to politicians, but like I just said, 50% of the company was owned by the government. So they basically paid themselves $1.2 billion. They were sued for $4 billion of unusual transactions and $22 billion of suspicious contracts. There were 22 people arrested, both former and current employees and also directors. This also included the president candidate for the Brazilian elections. Those were also running at that time. So you see, this is why I picked stock, because there was a lot of news about Petrobras, and that's basically why I started looking more into this particular company. Then, when I was looking into it, another thing happened. They had to present their third quarter results. But what happened, PwC, the Dutch consultancy company, they brought out the news that the numbers were delayed. And when this kind of news comes out, you should already start to think, something is happening. So I was more like, maybe this something is going to happen. At the same time, the oil price was going down, and basically what happens is that oil becomes cheaper, but the production costs for Petrobras were really high because they have to dig up like the oil 5 kilometers down below in the sea. So for them it's pretty expensive. So at the same time the stock price was going down, also due to the oil price going down. So that's also a thing that I took into consideration. Then on the other hand, I started to look into the financials. Petrobras makes contracts for a very long time. It's not like, say, Heineken. They sell beer, you drink it up. It's like 2 minutes and then it's done. What Petrobras does, they make contracts for 30 years. So the things they sell today, that they will take like 30 years. They have 30 years of cash flow. So that's pretty good because, well, it turns out there was a fraud, basically. So, but that doesn't really have influence on their current cash flows. They still are getting money in for their contracts they have. Also, their earnings were just good. They were rising each year, so that was also a good thing. So yeah, that made me think like, well, there's bad news, but well, the financials were good, so I didn't know really what to do. Well, next, I looked into technical analysis for another clue. And let me look at the bottom of the picture. You see the MACD. It pretty much gives a buy advice. On the top you see the RSI index, which was pretty neutral, so it gives a small buy advice. You see that on the last day when I looked, it was a 10% increase of the stock, so it was very volatile. Then we come to my proposal. I know that there haven't been talks about options yet, but I want to explain what I did. I proposed a straddle. It's an option strategy, and basically what you do, you buy 2 put options and you buy 2 call options. Paul and Jeroen and the whole academy committee will explain to you everything about that, what's going to happen with options. But basically what happens is we made a lot of profit if the price went up very much, and we made a lot of profit if the stock was going down very much. So when the price was stable, we were screwed. You can see that with the green line. There's a strike price of 11. We bought for 11. So if the price stayed at 11, we were screwed, but it turned to 6, so we made pretty good profit. Well, that's what happened. That was my proposal. It was accepted, luckily. And we made a very good profit on it. Oh, I made... I also made a summary at the end with good points and bad points, but I just told them all. So, are there any questions? For those of you who use Bink, you can make this with Bink. I don't know if you can do it with Giro or Lynx, but with Bink you can make this.
All right, thank you very much. All right. So unfortunately, we don't really have a proposal for you. It was more a proposal from last year that we used at CFQ. This is one of the examples why some investment groups still use Bink. Bink offers a lot of things, and this is called an optiewijzer, if I'm not wrong.
Yeah, option calculator.
Option calculator. And it shows you when you're expected to be profitable with your investment and when not, if you're using options. Options, we'll talk about options, I think in the beginning of December or at the beginning of January, not really sure.
Halfway December.
Oh, it's the next academy, right.
No. Halfway December. Yeah.
Oh, the next regular academy. In 2 weeks' time we have an advanced academy, and after that we'll have an academy about options. Like we already said, you can see the general structure in Eurojans is proposals. So first you propose some general information about the stock, like what happened, some news that came out, so what are the results. And it's basically his reasoning for his proposal. So just to clarify a bit more, the results of Petrobras were delayed, and well, of course, these results are either going to be very good or are going to be very bad. And investors didn't really know what to expect. So there were a lot of risk was involved in the stock, and we traded on that by buying our options. So if the price went up after the elections, after the results, they would profit by that. Well, if the price went down a lot, they would profit by it as well. The only thing we didn't profit and we will actually lose money was if the price would remain stable. And in the end, what happened is the price went down quite a lot, and we made a nice profit on this. And so it was a very nice proposal from Eurojan. Next, we have a proposal by Robert Kaptein. It's a bit more, a bit less risk, and it was, I think, used by the investment group that won last year, if I'm not right.
Probably, yes.
Probably. All right. Good luck.
So hello everyone, I'm Robert Kaptein, I'm the secretary, so I'm that guy who sends you all the annoying emails. So, well, first I want to show you something. My investment proposal is not about a single stock, it's about investing in the market as a whole. And this is the ranking of the investment competition from last year. So you see all the investment groups, you see the M squared, you see the returns. What you also see is some benchmarks, the AX, the Euro Stoxx, the S&P 500. So we put those also in the competition to compare those with the rest, with all the groups. And what you see is that there are only a few groups that outperform the benchmarks, the indices, the AX, the Euro Stoxx, S&P 500 is also doing quite good. And if you look at the right side, like almost half the groups half the group made a loss. There's even one group called Rising Investment. They had a return of -72%. I don't know what they did. Yeah, the thing I want to say is that those groups would have been probably better off if they would just have invested, well, at least some part of the portfolio in the markets, and with markets I mean like, yeah, those indices. So how can you do that? There are some, you can buy an ETF. If you want to invest in the market as a whole, I think the best opportunity is an ETF. An ETF is an exchange traded fund. What it is, it's actually a basket of stocks. So with one click, you buy like, 25, maybe 100, maybe a few hundred stocks at once. So for example, you have an ETF for the AX, for the Euro Stoxx 200, for like everything. So my proposal is about a Think Global Equity ETF. It's from a Dutch ETF provider. It's called Think, and the advantage of a Dutch ETF provider is that you have a small tax advantage, because if you have a look at the dividend, normally you will pay 30% dividend tax for international ETF providers, but for this one, since it's a Dutch one, you only pay 50% dividend tax. And this ETF, for example, pays 2% dividend each year on average. And the thing is, stock markets, they increase with like 8% per year on average. That's on average, so you still have some risk, but yeah, that's what investing is about. So, well, I would recommend you to at least put a part of your portfolio, just buy an ETF, just invest in the market. And that's good for two reasons. Firstly, diversifying. You can diversify against really low cost. Because most groups, most investors, like if I look at myself, when I started with investing, I bought like a few stocks. I bought like Shell, Volkswagen, McDonald's, and I felt like, yeah, this is different industries, different countries. Well, this is probably going to be really well diversified. Well, actually, it's not really diversified, of course. So I think an ETF will help you with that. Against really low cost, you can diversify. And the thing also is we measure the competition with the M squared, which takes risk into account. So I think it's a good way to diversify, to lower your risk with the help of, for example, this ETF, but there are all kinds of ETFs. So I think, have a look at this. Put part of your portfolio at least in something like this, and I think it will help you. And don't end up like me in a group Rising Investments, you know. So thanks.
Thank you. So now we actually have a proposal. We don't have a specific ETF in this case. We would like to have this small discussion with you if you want to buy this ETF or if you don't want to buy this ETF. So did you have a specific ETF in mind, or?
Yeah, well, I had the Think Global Equity ETF. So with this ETF, you actually buy 250 stocks all over the world. And but there are all kinds of ETFs.
Right. So in this case, the proposal is to buy the Think Global Equity ETF. It has 250 funds in it, and we'll have a small discussion if you want to buy it right now. The nice thing is the board has a portfolio at Bink, and we'll be able to put it in the shadow portfolio of Bink and to see the results. So in the next couple of academies, we'll show you the results of their proposals and see if they're really that good. So
I want to start off with what is Robert missing? Not to attack you, Robert, but what is he missing in his proposal? What do we not know? What we should know? Yes. Well, okay. You could name 250 companies. Okay, that's another one. Really important one. Yes. When we get out. Yes, indeed. But also, how much do we invest? Were you going to say that? Okay, technical analysis. Well, on the ETF, what do you think? How do you feel about technical analysis on the ETF?
I think it's important to determine your get-in moment and your get-out moment. But in general, an ETF like this is mostly it's global, so you have to take things as the world economy into account. And well, maybe you should take a look at how much each industry is presented in this ETF. I think, for instance, if you take the 250 biggest companies in the world, then you have a lot of technology companies in there. You have a lot of oil companies in there as well. So you maybe need to take a specific look at these companies. In general, the technical analysis will hold, and it can help you to get in, but I wouldn't really rely on it for the long term.
So Robert, what do you suggest? How much money do we invest?
Like in your general rising investments portfolio.
Okay, don't take that one as an example.
You have a portfolio of 5,000 euros. How much would you invest?
I have, well, they are actually all invested in ETFs. So it's like 70% in global markets and 30% in bonds.
Okay. Thank you.
And how does the public feel about investing all our money in ETFs? Is it fun?
Yes, Karan, you have an opinion.
It's boring.
Yes.
Just take risk. Just do stuff. Although it's nice
We're here
to.
to
Yeah.
learn, not to invest our pensions.
If you want to win the investment competition, I think this is the way to go. It gives you a lot of risk reduction while you still get a pretty basic return. If you want to learn from your experience from DNR, well, don't put all your money in there. Put some kind of safe money in there and use some other money for fun things. Just subscribe to the ABN AMRO prospectus or do something like things that are actually fun. So let's make your proposal a bit more specific. We want to invest 2,000 euros of our 5,000 euro portfolio into private equity, or in the global equity ETF from Think. And so how would you feel about that? Anyone have any opinion about doing this? Some nice advantages, some disadvantages. All right. Yes.
For example, the ETF cannot be a jack of all trades. It cannot go just one way. Like you said, it's a safe bet. It is a safe bet, but doesn't it fail also? The ETFs, if you buy. For example, this is 250 companies. If I'm understanding correctly, they're all in different industries.
Okay, so basically you're asking a question about the scenario analysis. Am I right? So how can this go bad? So because we are presenting it as if it is a safe bet. Yeah. We are going to make money on it, but how could things go wrong?
The escape plan.
Yes. Does anyone know when? Yes.
Like generally there is like a big bubble like this.
Yeah. For instance.
2008.
Yeah.
Yeah.
Yeah, when the whole global market is collapsing. When what we saw was China, the end of August. Big. There was some bad news from China, so the whole market of the whole world went down. That could be bad for such an ETF, right? Yes.
All right. So indeed, these global crises are basically the only thing that can affect this ETF in this case. I don't know how you felt about it during the Chinese crisis. The problem with this thing is it's long, and it has 250 companies in its portfolio, and all of them are long. And it's pretty good for your general portfolio. I mean, 80% of the time these markets are moving up, and your expected return of basically every stock is positive. So in general, it should be long, but it might be a good idea to have some short position as well. So back to our proposal. I think most of the important things are already said. Who would like the BNR board to invest in this proposal? Like, put your hands up.
Is
All right.
Ursula with you? Shit.
I'm not sure.
Would not like the BNR board to invest in this proposal? And there are quite a lot of indecisive voters.
Why not?
It still in itself is pretty
bit boring and wholesome. I mean, there's nothing to learn from it really. I mean, I didn't come here to follow an index.
No, that's
Yeah, pretty good explanation. Any other explanation why you would not want to invest in? Yes.
Well, you can choose like ETFs with 600 funds, so I'm wondering why Kaptein hasn't choose to choose an ETF with 600 funds. And if you want to diversify and say you want to have a small return, you can as well invest in the S&P 500.
Pretty good point. Another big question mark would be, alright, you have 250 funds, how are these funds selected? Are they mostly European or American, or are there also Chinese funds or Japanese funds involved? Are there emerging markets involved in this fund, like it's a global equity, so maybe there are emerging markets in there as well? I mean, these are in our world as well. So there's a lot of questions that are not really answered yet. I think most of the votes were yes, so we'll put them in the shadow portfolio and we'll tell you something about its performance in the next couple of weeks. For now this is closed and we have our last
one small remark about ETFs. I would suggest you, when you have 5,000 euros in your portfolio, at the end of the year, you're going to during the year you're going to make proposals, and you see that a large amount of your capital will not be used. I suggest then you buy ETF and maybe take it over the summer, so you have immediately at the start of the competition ETF to start with to gain some extra some extra return while having a low risk. We at CFQ currently have 2,000 of our 5,000 capital invested in 2 long ETFs. We have a minimum volatility over the whole world, equity ETF and healthcare ETF. So also an industry-specific ETF could be interesting for you.
All right. Next, we have our chairman, which probably has a very interesting proposal. Oh, good luck, Tim.
Mooi zijn.
Alright, ladies and gentlemen, after that dazzling introduction of me clumsily getting up, I'll introduce you to what I'm thinking of buying. Maybe those of you who attended the workshop already heard about this, but it's Starbucks. Alright, Starbucks makes a ton of money because they sell coffee at a premium rate for which there's no real reason. But for somehow, people keep buying Starbucks. I am one of those sinners as well, though. So, who am I to complain? Alright, so let's use this board. Right, what can I... Right.
Populair. Ik denk wel de film, ja.
Alright, Starbucks. Alright, I think everyone has a general idea of what Starbucks does. They sell coffee, as I just said. They're also pretty much the only truly global coffee chain. Alright, so let's write it down. Global. They don't have any real competitors in terms of their largesse or real specific brand. You could think of McDonald's because they're McCafe, but they also sell burgers. In the United States, you have a lot of local larger firms, but they're not extended to Europe. In specific European countries, you have local heroes, such as Coffee Corner here and Brazilian hipster places. But overall, Starbucks is the only truly global brand, and with that, has a very, very strong brand image. Alright, well first, we'll just walk through the list. Alright, general information, fund analysis. I'll start with qualitative. Alright, it's just been said. What is the first idea, what we first do when we perform a qualitative analysis? Speak up. SWOT analysis, indeed. weaknesses, opportunities, and threats. So already, main mentioned too, we have a global brand. We have a very strong brand image. Alright, we'll have a bunch more things here. And maybe another thing, once you start buying Starbucks coffee, you don't stop buying Starbucks coffee. Very strong loyalty. It's like crack or something. Yes. The whole board is on drugs, though.
Wow.
Alright. No. A weakness may be that it's expensive. Just Starbucks. What's going on? Why is this?
Man, you're just on drugs.
Alright, another key metric for weaknesses is they have an over-dependence on the United States. What's more? Alright. The only thing that could really tarnish their brand is that they're the #1 brand that comes in the news about tax evasion. So we have a weakness there. Tax, evasion, you could call it a strategy, could call it a quick, nice strategizing or optimization of tax burden, whatever, but the bottom line is that they pay less tax than your national coffee brand. And people aren't happy about that. Alright, where are opportunities for Starbucks? Does anyone know? What could Starbucks do more? Emerging markets, yes. Alright, what more?
Other drinks than
Yes.
just coffee.
They're actually expanding right now with lemonade.
Lemon.
Right, things and threats. We see an increased competition. And also,
Technology is also a big opportunity.
how was that threats, man? Right, because we don't have that much time anymore. I'll quickly, we won't go in depth in our SWOT analysis because we have a bunch more. And also, there's certainly in the United States, we see a maturity or maturization of the market. So there is increased competition and also, that's what I said already. Well, there's market saturation, so there's maybe not that much more opportunity for growth. That once everyone already buys 2 cups of coffee a day, they're not gonna start buying 4 cups of coffee a day. Sort of. That's what the saturation means. And there's also price volatility in coffee beans. They're getting more expensive every day. So we have coffee price volatility. Let's see. Right. Well, that's for our SWOT analysis. Right. So now we have a little bit of an idea of what the company does, where there may be opportunities, whether it has growth potential, because that's what we're looking for always. The stock, once a company already makes billions of euros or dollars or yuans or rupees, whatever, profit, but they're not going to make more profit. For us as investors, there's no reason in buying the stock because it won't go up anymore. So growth potential is the key metric for which you're looking. Growth potential. Alright, when we see this, do we sort of think there's growth potential here? Can Starbucks sell more coffee or can Starbucks make more money? Yes. Alright, I think so too. We have a emerging market opportunity. We have a opportunity for diversification in the product line. And Whispering, they have also an opportunity in technology where they can develop apps and stuff like apps where you can pay with your phone and stuff. And in their market segment, well, essentially restaurants aren't really technology companies, so they have a hard time adapting to that, and Starbucks is a leader in that. Alright. Well, let's skip the Porters by Force analysis. Oh, that's interesting. Alright, we can do some quantitative fundamental analysis as well. So we'll always have a look at the balance sheet there. Alright, so I print the balance sheet. Your Skype. Well, I just and we go to Morningstar. Alright. Brace yourself for some beautiful fundamentals. Alright. This is the gross profit that essentially every investor loves to see. There is essentially nothing going on, and we have an increase every year, with an expected increase this year once again. There is no reason to expect that Starbucks in any way will be not performing on this forecast. It's not a wonky company like Air France KLM, which is on the verge of bankruptcy, where literally the clothes are being torn off the back of their CEOs. They just sell more coffee every year over and over again. So here we see gross profit that's increasing. We also, for the revenue, which is steadily increasing. The cost of the revenue is increasing as well, which is no real surprise because you need to open more stores, you need to buy more coffee to sell more overpriced coffee. Right, the only real surprise is the net income. There in 2013, apparently Starbucks made no money at all. Right, does anybody any idea what happened there? Legal issues, yes. My fellow Academy members are thoroughly prepared every time. But what essentially happened is they had a contract with Kraft Foods, which is a, is it a multi? Yeah, it's not owned by anything else. It's an American foods multinational, and they had the right to be the sole seller of Starbucks coffee beans. Right, and at some point Starbucks thought, you know what? Screw that deal. Alright, and the Kraft didn't like that, they took them to court and they settled for $2.3 billion, which is why they made no money. But that doesn't matter because in 2014 their profits recovered as expected because there's the core business is solid as can ever be, and we have an increasing net income there as well. Okay, so I can go over more fundamentals like this, but it's all upwards trending and no further surprises except this. Also fun to note is the profit margin, which is, wait a minute. The gross profit margin. So it's 59%. So that means for every euro they make, or dollar, well, it's gross, not really, but what basically is they have a very high margin. So with some minor faults there, for every euro they get, 60% is profit. So 60 cents goes into the pocket of the investors. See Paul sort of, see Jeroen. Like this. Alright, well that's the basic there. While the competitors are at 38% growth. So Starbucks is just that much more solid. They also have a better current ratio. Also have a better quick ratio. So in just on all metrics, also return on asset, return on equity, return on assets, it's just much higher than the industry average. Because always with fundamental analysis, the quantitative part, we have numbers, and we want those numbers to be higher than the industry average. We think about the growth